What's going on, everybody? We are back with this week macro outlook. Now, before I get started, make sure you guys like, comment, and subscribe to this video. Turn on the post notifications too so you can get the videos when they drop. So don't forget to do that. But before we get started, I'm not gonna really touch basis on what happened last week because I did that in the midweek, and I also did that with that CPI data that came out on Friday. I gave you guys like a bonus video. But what I will say is, let me see. Boom. Last week, CPI, if you missed that, last week, flash manufacturing PMI and flash services PMI, they both came out pretty solid. So that still shows that there is some strength in the US economy. Nothing too crazy. But it can send like a warning to the Feds, like, hey, we are on track with inflation coming down, but we still see some other underlying data that can send inflation higher. Now, this week we do have the Fed's fund rate decision, and I'm going to talk about that. But coming off this CPI data, it definitely supports a cut besides the year over year that did tickle back up. So that's the biggest concern there. Now, going into the macro for this week, we definitely got a lot on the table that's going to be moving the market. Starting on actually Tuesday, we get some consumer confidence in the US, and we also get the Richmond Manufacturing Index that comes out on Tuesday as well. Now, manufacturing in America has been a roller coaster. It's up some months, it's down some months. It's just been going back and forth. Joe Biden really killed the manufacturing sector, but Trump is trying to rebuild it. So markets are expecting a small increase, but we'll see. We had a big miss. Like, it's just been a roller coaster. Up, down, up, down. Slowly how it's been playing out. So not surprised if that even comes in lower than expected, but expect what the market expects. Consumer confidence expecting to trickle down a little bit. Listen, same thing. It's been a roller coaster. It's been strong. It's been low. But data is being revised up, so that could be showing the trend in the previous revisions. So wouldn't be surprised if that pushed back up, especially with inflation falling. Usually when inflation falls, consumers are more confident in the economy, in the markets, in prices. So that could be a jump. Also, then we have CPI for Australia. They are expecting CPI to push back up. Listen, y'all, I've been seeing the downward trend in Australia. I also see like a sign of deflation there, but I'm not shocked if they get more inflation due to the tariff wave that it played on global economies. Now, Australia has been cutting interest rates too. Their rates are quite low. They're down at 3.6%. If inflation goes up, that's also a bad sign for the economy. Because, yeah, usually they cut rates when inflation is falling or when the economy is weakening. So if you have a weak economy and inflation is rising, that's not a good mix. Now, they look at the trim CPI quarter over quarter as their like major index. They're expecting a bull on Aussie this week. So we'll see. Wednesday we may get an opportunity in AUD USD, or it just may continue to fall, depending on how that inflation data comes out. Bank of Canada, they have their monetary policy meeting coming after that CPI that came out last week, which was quite solid. Wouldn't be surprised if they pause rates this week, but they are expecting the cut. Expect what the markets expect. Then we have pending home sales. They're expected to fall. Listen, this has been sideways too. All this data has really been sideways, so there's really no solid trend in kind of even trying to forecast it. Just let it come out and find an opportunity after the data has been printed. Don't try to fight Forex Factory and bet with it or against it. It's not how you trade. And then we have the Fed's fund rates. They are expecting the cut. Expect what the market is expecting. Like I told you guys last week, there's no huge sign besides ADP payroll that may push a cut. We didn't get NFP, so we don't know. We did get that fall in inflation, but we saw CPI year over year pick up. The last PCE data that came out was also low. Let's take a look. It was in September, if I'm not mistaken. I want to look at that PCE data. I think it will be under inflation. PCE, oh, it was unchanged. So still again, and that's the Fed's biggest factor of inflation. But it did fall from previous, so that could be some sort of support too. But I don't think inflation is gone. I definitely think it's still sticky. Like I said, y'all, I wouldn't be surprised if the Fed decides to hold interest rates. That's just me. I wouldn't gamble that. I wouldn't trade that. That's just like my take on what may happen with the data that comes out. Now, let's go back over to October to see how we're going to end this week. So yeah, funds rate from the Feds. We just have to see when that data comes out. Please don't gamble that. And then we have Bank of Japan. I don't think they're going to hike or cut. I just think they're going to hold. Real wages are falling, so I just don't see a sign of Japan doing anything but talking and moving the market. But we may see USDJPY push a little higher. And then we have advanced GDP for America that comes in. They are expecting a fall, especially from that big jump back in September. It was a massive push to the upside, but we'll see. Tariffs definitely caused this. Tariffs definitely caused these two falls in GDP due to the fact that the economy had to adjust to the tariffs going into effect. So it made that GDP, and I was talking about this on my live streams. If you was watching my live streams, that GDP fell due to the tariffs reaction. And if you see, it's been revised up back to back. Now, it was revised down previous a little bit, but I wouldn't be surprised. Oh, it was revised back up 3.8%. So yeah, I'm not so on it falling. And if it falls, it probably won't move markets that much. Now, next we have EU. They are expecting to hold rates. I mean, that's just what they're expecting. I don't see them cutting. Their rates are already low. It's at 2 point. They have like the lowest interest rates across like the major markets. So the major economies. So their rates are already low. Now, if they continue to cut, that's scary. That's very scary. Now, they may cut because the economy is still pushing. And it's getting hard for people. I know that sounds weird. When the economy starts to push too strong and things start to become expensive, for them to stimulate the market is going to be by cutting rates. Just think about it. So I wouldn't be surprised if they continue to cut. But I wouldn't be surprised if they hold. I know they're not hiking. So, yeah. Core CPI in Japan is expected to push up. Yikes. And then, yeah, that's pretty much it. We get some core CPI data that comes out on Friday for the euro, which is expected to fall. And then some data coming out for Canada and America on Friday. Core PCE is the biggest one. But it's crazy how that's coming out after the Fed's funds rate. But yeah, that's just what's happening. So some good data finally on the calendar that's going to move the market so we can get some opportunities. Now let's hop into TradingView to just see. Now, going to the monthly, y'all, monthly, like I said, monthly hasn't moved that much. So I'm going to dive into the 1 hour, but don't try to use this as like signals. Please don't. This is literally just to see where the market is ranging at currently. If you want to take opportunity, you can, but my stop losses and my take profits are from the monthly. Just know that. So, all right, DXY playing out pretty much what I expected it to do. I told you guys, the late buyers that were up here that were buying DXY, trying to chase the market, I'm sure they got liquidated on this dump on CPI. And I told you guys, 98.77 was a great opportunity, and if you got in that bad boy, I mean, that was a nice buy. Oops. That was a nice push to the upside off that. Really no drawdown. So it was actually pretty solid. Now, can we continue to push up higher? Yes, this can play out really two different ways. We may can get a push back up to here and consolidate back down to here. And I wouldn't be surprised. Now I don't know how many times it's gonna consolidate, but that's an option. Or we can continue to break out, or we can continue to break lower. Oops, let me do that. Or we can continue to break lower to about 98. So that could be like the play. But fundamentals, macro is still supporting a strong dollar. So we'll just consolidate in and we'll see. S&P actually S&P actually gap on Friday. I guess that CPI day. It actually gap after CPI, so that's crazy. Like way after CPI. Don't know what that was the cause of, but I'm still waiting for that bad boy to pull back. I mean, like I said, if you're shorting it, have solid risk management. Don't be too greedy. But it's an opportunity to hedge it down for sure. But yeah, that gap definitely needs to get filled. That gap definitely needs to get filled though. Yeah, I don't know why this always do this on S&P. It doesn't let me move it. Let me try another one. Cause I don't know why that always does that. Okay, there's not even a gap on this bad boy on here. Let's add this one to the watch list. See, that's why you gotta look at these markets because all these markets don't even be gapping. Maybe a gap. No, it couldn't gap because it's the 1 hour. So, I mean, it hasn't done much. Now we are trading between 67.15 and around 68.29. So, I mean, markets probably just decide to consolidate back to that low, may even consolidate just in this range, or we come down here and it falls lower down to 6,600 because most people are talking about that China and the US made a deal, which they never made a trade deal. They just came to a basic consensus agreement, meaning Trump can't threaten China online anymore with tariffs or announce anything new. But knowing Trump, that guy will break a consensus deal anytime if they don't give him what he wants. And China looks like they're not giving him what he wants. So February 2020, markets are starting to look like that. And if you saw how markets looked in February 2020, the price action is literally the same, especially when it comes to S&P. Now, let's take a look at so S&P. Literally, I'm still bearish on this. Long term, I'm bullish. Short term, I'm definitely bearish. And every time we like come to these highs, we do get that massive rejection. So wouldn't be surprised if we get a push back down to like 66 or even to 67.15. So yeah. Bitcoin just consolidating from 114K to about 110, really? Yeah, to about 110. So weekend Bitcoin definitely rallied, but now we run it into like some resistance, that same resistance over here. So expect the consolidation, if anything. And then my analysis is to break lower back down to that 107 down to like 105. So really just consolidating from here to here. But yeah, I mean, I actually think this is a nice short on BTC. To be honest, I'm actually going to short this bad boy right now. That will be a nice push to the downside straight from this weekly rally. I mean, this weekend rally. So I'm going to short this bad boy. Okay, then we have Euro USD. I mean, this bad boy isn't doing anything. It's really just consolidating between the 200 day and the lower Bollinger. Um, I'm still pretty bearish on this. If you zoom out to the monthly, it's still below our sell above level. Like it actually failed. So those were the sales that you wanted to get, and now it's below. So you really can't do any. Well, I mean, you still have a solid risk to reward if you want to sell it, right? I think that 200 days holding as a resistance. You see all this rejection, all these wicks. That's just rejecting to the upside. So won't be surprised if that bad boy falls. I actually sold this at the top of this wick on CPI. The markets broke up. I got my short, and I'm sitting there some small profits on it. But overall, I'm seeing in heavy profits on selling EU. GU didn't have as much strength as the pound, hey, I mean as the euro, but it did push up, and then it rejected that 200 day and it fell again. So I expect this bad boy to continue to fall, break below 1.32, and then we'll probably fall to that 1.32 level. Whoa, this bad boy can go low. Let's go to the daily. Let's see the daily. Yeah. After 132, we're really looking at 124. But it's gonna take time to get there, but I wouldn't be surprised. That 200 day on a daily is looking a bit weak. You don't see any strong rejections either. So I wouldn't be surprised if that 200 day breaks on the daily. Let's go back to the 1 hour. But literally, we still trading in this range. I would not suggest selling this now. The only way you can sell it if it pushed back above that 200 day and then it pushed back down. That's all you could do. Because if you sell it and then pull back, now you just got stuck in some drawdown. And I know y'all want to avoid the drawdown. So that's what I'm trying to give y'all like that insight so you can avoid that drawdown. All right, then we have USDJPY. That bad boy is gone nonstop. It even rejected heavily to the downside. That CPI came in negative, and the markets was like, we don't care, and it just pushed back up. Now UJ can pull back down to 151 and just consolidate in like that 153 level, but if we take a look at this, I mean, if we take a look at the macro that's coming out this week, we don't see anything. Now, the markets can be the markets, and this bad boy can pull all the way back down to 150 and then push back up. So I will say just get your, I mean, it's extremely too late to buy this. Like, you just missed this because we're gone. We bought this down at 140, so we're already up about 900 pips. Like 12, like I'm up solid on this trade. So I'm not even really, I don't care if it goes down or up, to be honest. But if it pushes back to 150, I'm definitely gonna give me a nice little entry. Cause there's a gap that still hasn't got closed on that 1 hour. But that's at like 147. I don't think that gap is gonna get filled. Remember, when the gaps with the direction of the trend, don't expect it to get filled. Because I know a lot of people are selling that UJ down to fill that gap. And look, it stopped right at the top of the gap. So yeah, you don't want to get caught on that side of the market. AUD USD, I got me a nice short on this bad boy on that CPI data. We spiked up. I sold it at the top. Now I'm sitting in some profits, but I mean overall, I'm on the monthly. I'm big profits. I sold this boy like 68. So I don't care if it goes up or down at this point. I'm just gonna try to find some good ops as it trade down. And yeah, that's all. That's all you really can do. But the downward trend is there. We're in this consolidation phase. Even if I was to pull this bad boy over here to that resistance that got broken, I mean that support that got broken, and it's just been consolidating. So AUD USD really can fall to 0.64, especially if they hold rates. I mean, especially if they cut rates. A surprise cut can push that bad boy down, or the commentary around the rates can push it down. But that's that support that is rejecting to the upside, break retest. So yeah, NZD USD, I got me a nice short on here as it pushed up high too, but not much. Same thing. That support that got broken, that's all. Nothing bad. But this bad boy can fall as low as 6583. So, I mean, you obviously, if you short it right now, it can push back up to that high before it falls down, or it can just fall down. So, remember what I told you guys about how you stack, like if you want to take a trade, but it can go and draw down, you want drawdown to be opportunity, especially when you're selling at a support, because technically you're selling at support because it probably falls. But you got to prepare yourself if it pulls back up to that resistance, because that's the real short. But sometimes markets just break lower. All right, then we have USDCHF. That bad. I was expecting that bad boy to fall much harder on CPI, but it actually didn't. And it's because that CPI was really sideways. But anytime, let's see where we're sitting at on the daily. It's so below the 200-day, the buys are the only ops in this market. But if you don't want to buy it because it's a hedge, you just got to sit it out. But once we break above that 200-day and we break higher than 0.80, then we're really out of here. And then USD CAD, really not much of nothing. CPI sent it lower. So could be a nice opportunity. Clear as a break and retest. Um, I don't expect Canada to hike rates or cut rates. So I wouldn't be surprised if this bad boy probably do push a little bit lower. But let's go to the monthly just to see. This just like UJ. I'm so deep in profits that I'm like, if it goes lower, cool. Hopefully we can get to the buy below level again so you guys can long it with some leverage. But right now, I mean, you just gotta sit on your hands at this point. So that's this macro outlook, technical outlook also. I am gonna do a mid-week recap on Wednesday. I'll release it after, what data do we have coming out on Wednesday? I will release it after the Fed's funds rate. So it's gonna come out. It's gonna come out. If you're in South Africa, it's gonna come out around like 10 p.m., 9:30 p.m. But if you're in America, it obviously come out after this video. But I'll drop it right at the end of Wednesday. And then on Friday, we'll come back and we'll recap Japan and this PCE data. And then we'll prepare for next week. So that's all I got for y'all today. Don't forget to comment, like, subscribe, and turn your notifications. But before I go, what I want to do is dive into some of these questions that you guys dropped. So on my YouTube video. So the first one we got was VXX has undergone numerous reverse splits to maintain a tradable share price. Does the existence of these reverse splits themselves create a psychological anchor or a tangible market structure effect that impacts the trader behavior and liquidity? So VXX follows VIX futures, not the VIX themselves. When they do a reverse stock split, it's only because they don't want to be removed off of like the tradable markets. So they create those. I've been through multiple reverse stock splits. It only has a psychological anchor on somebody who don't understand what they're trading, but it really doesn't do anything to the markets. Literally, it doesn't do nothing to your trade. It doesn't do nothing to your profits, your losses, nothing at all. We talked about that flash services PMI. What else? Thank y'all for these comments, man. These are some solid comments. I'm glad it's helping you guys for sure. How do you join my mentorship? You can click that link in the bio, the Telegram link, and you can message my team, or you can shoot me a message on X and I'll provide you with more steps. Someone said this is information that, if interpreted correctly, will make you money. Thank you. That I will say, especially coming off of that Friday CPI. Nice, solid. All right, let's see what else we got. I think that's all for right now. Oh, here we go. Someone said, "Thanks, man. This is the second time I'm watching your stuff here. You dish out lit tips. This Bollinger indicator. What do they specifically do for you? Asking. So one, I use the Bollinger Band because when you trade, you're really trading volatility, right? So you have to understand like how high the market can spike and how low it can like spike low. So when I use the Bollinger Bands, it just prepared me because if you use a support and a resistance, some of those levels aren't strong, especially if you're on the small time frames. So I use the Bollingers as my support and resistance. And then I operate on the 200-day and I use that as like what price will range. So example, here, let me, let's go to EU. So here, let's go to the 1 hour, just so I can show you on the 1 hour because it's mapped out. So here, this is what I would consider my resistance, and this is what I'll consider my support. But I used the 200-day to see where price can range at. And if you see how here we broke up, we came down, that's a nice range. Well, I would never try to buy that up. But even here, it ranges. So it just kind of gives me like a map to see what price is doing, especially if you go down to like the smaller time frames for sure. Alrighty. Thank you guys for these comments. Someone said, bro, do you mind maybe show us how you analyze a country's economy from A to Z? I will look into doing that for sure. Given DXY, that's what I'm assuming, is sitting on an important level, do you think we can get a new high past 114? Good question. Now, if we go look at DXY and we look at the monthly, yes, we possibly can. We possibly can. Because when markets trend, they can go higher. So I draw my fields from the low to the high. The breakout above that resistance, price really can push up to like 120. So, yeah, if that answers your question. Yeah. So if I measure that to the upside, we can break as high as like actually like 124, 120, 124. But we'll see. It is a nice support. You see that range that I was telling you guys that we can consolidate in. So we can even do something like this. Boom, boom, we can just consolidate. But then if we break out high, we can go up to like 120. That could be the peak. The dollar has to rally high before a recession happens. When a currency gets too strong, that peak, then it falls. That's when you call the recession, when a currency gets too hot, like EXY, JPY, JXY, BXY. I think it's BXY for the pound. Let's see. I think it's BXY. Yeah. And you see that currency grew much stronger. Now it's rejecting that 200-day. So we can fall low as 110 on the pound. Same thing with JXY. I shorted this bad boy too when it rallied up to that monthly resistance here. When it got to like 70. You can see it better on the weekly though. Right there. Booyah. So that was a solid. It broke a little bit on the daily. It went a bit higher. That's why I got the short at like right here. When it was boom right there. So now we falling low. And I think we can just continue to fall lower on this bad boy. At least down to back to like 61. Maybe as low as like 59. But we'll see. Don't wanna overstep our boundaries in these markets. We'll just let it play out. But I think those are all of the questions that I got that I can see. Someone said, I'm really enjoying your content, Jamaal, and I'm learning so much from it. I'd love to see more. Could you please refrain from deleting your videos from YouTube? I find them really valuable. Yes, I will. Now that I've rebranded this channel to like my personal, I'm gonna keep the content up there. Now y'all, I can't drop every day because that's just a lot. But I will give y'all videos that I think is highly needed outside of the macro weekly outlook and the mid-week recap. But yeah, but I'm glad you guys are actually enjoying this. Someone said, firstly, thank you for your great job, Jay. More of fundamentals and market directions. Fire. All right, y'all. So that's all I got. Remember, comment, like, subscribe. Let me know what you guys think. Don't go into these markets getting liquidated this week. It's not really crazy data on the calendar for you to get liquidated, unless your risk is just too much. Don't trade the markets before the news. Don't trade the market before the news. Let the news come out. If the market give you an opportunity, then you adapt to that. Do not trade the market before the news.